Okay, it looks like we're finally live. Sorry to everyone for us starting a few minutes late today. We had some technical issues. We had AirPods that weren't connecting. I had fire alarm notice happening in my building, so I left. But we're here. We've arrived. So thank you so much for joining us today, Lisa.
Yeah.
Lisa
Thanks,
is the
Martha.
Of course. And so Lisa is the founder of REMCO Commercial Real Estate Solutions. And not only is she the founder and principal, but she is also a licensed real estate broker and licensed general contractor. And today, Lisa's going to be talking with us about asset management. How's it going today, Lisa?
It's going well now that everything's working, and it's
We're
great to be
on
here
track.
again. And I'm really
Yes,
looking forward to our discussion today on asset management.
that sounds great. So I'm really
Yeah.
looking forward to our discussion today. And before we dive in, let's talk about a couple exciting things. If anyone has any questions at all during the course of this live stream, feel free to type them into the chat boxes on Facebook. And we will answer them as the questions come in, or we'll save them until the end. But we will make sure to answer them. So feel free to type them in at any time or any comments of any sort. Also, we have one other exciting thing that we want to mention today, and that is that over the next couple of business days on our Facebook, if you stay tuned, you will see that we're going to ask a question on our social media. And that question is something that you would know the answer to if you've watched the duration of this live stream. And if you're the first person to answer that question correctly, you get a really nice giveaway bag from Remco delivered straight to your mailbox. So do stay tuned to our social media over the next couple days, and hopefully you answer that question right and you get our giveaway gear. All right, Lisa, without further ado, I think it's time to turn the mic over to you. So let's start by talking about, can you break down for us what asset management is related to commercial real estate?
Sure. So asset management is, in general, managing an investor's real estate portfolio. Making sure each property in the portfolio is performing as planned, mitigating any risks that would arise, and really just looking for opportunities that would add value to the portfolio for the investor. Real quick, in last month's live stream, we had talked about what a property manager does.
That's right. I remember we had someone ask a question at the end of property management live stream last month, and they were asking kind of what the overall process of property management was from start to finish.
Right. So I wanted to bring that up because the terms, property manager and asset manager, they're often used, in general speaking, one for the other, inaccurately. The roles are very different. Where a PM is handling the very intensive day-to-day management of a property. If you remember, handling all the on-site leasing and collecting rents, and also overseeing the on-site vendors and work orders and paying bills and so forth. An asset manager is more the forest through the trees person. And they're focusing on the entire real estate portfolio as a whole, working very closely with and managing the property managers on each asset for the portfolio, and just liaisoning key information between the PMs and the owner and whatnot. So just very kind of different roles.
Sure. And so we talked last month about what a property manager does, and you've just kind of reiterated that for us. And so now we're starting to really differentiate between that property manager and an asset manager's roles. And so what key deciphering indicators is it that, or are there, that a asset manager looks for?
Well, an asset manager is really working with the PMs and taking from their communications and their reports. I guess good, key stats. This would be what I said, probably where we get into key performance indicators, like you have in any industry. For the commercial real estate industry, we're really looking at 3 sets of KPIs. You've got your KPIs of the asset, your microeconomic KPIs and the macro. So I can go into the three different types. With the KPIs of the asset, we're really looking at occupancy level, rents per square foot, aging accounts receivable. Are the operating expenses in line? What's my current ROI versus projected? The NOI. I always like to run a spot test, like if the owner were to sell at their desired price at this very moment, what cap rate would that put them at? Other KPIs of the asset are, looking at it like your lender would. How's your debt yield? What's your debt service coverage ratio? Just really looking at the standard health measures of the asset, and then relate all this to and track it against the micro and macro markets to the varying degrees that your experience dictates relevant. And importantly, track it against your own assets history and your portfolio of assets and what you had, pro forma'd for this particular asset.
Sure. Okay. And so if we're getting kind of back to that relationship between the asset manager and the property manager, it sounds like, an example of this dynamic in real life might be that, the asset manager might determine, okay, this is what the occupancy rate of this building should be. So that's the KPI for the asset that the asset manager is deciding. We need our building to be at 90% occupied in order to meet X goal. And so then because that asset manager decides that or determines that, then they roll that plan out to the property manager and work very closely with that property manager to say, okay, property manager, I need you to help me get your leasing team to get this property to that occupancy rate. Is that an example of how this might play out?
Yeah, absolutely. So you're just in constant communication with your PMs, and guiding them as to how to best tweak the performance of the asset. Then I would say would move into the microeconomic KPIs, and this is really your surroundings and the pertinent people encompassing the relevant area of the asset. So for surroundings, we're talking just, area activity, developments, performance of like-kind assets, shifting demographics, major businesses coming to the area or vacating the area, and just staying close to the news of the related business development boards and organizations, like that. And then when I'm talking about people, being a microeconomic KPI, you've got to stay plugged into the people related to the industry. What are they seeing and experiencing? These people are your local lenders, real estate brokers, appraisers. Where are they seeing cap rates at, and on similar assets and differing assets, staying close with the mortgage brokers, even title agents and GCs and subs. Just, are they busy? What about the cost of materials, going up, going down? Those are really, more the micro kind of vicinity features that I would be looking for.
Sure. I can see how those are important to look at.
Yeah. And then for the macro, KPIs, you're really talking major news, major markets and rates. With major news, obviously we're all familiar with, with the impact of a pandemic or crisis, changes during election years, recessions like 2008 and 2009 and the impact that had on our industry. I think here in, South Florida real estate in particular, that bled well into, 2011 and even 12 for most of us. And for, major markets and rates, it's just, and really like you would in any industry, being apprised of the, general current performance and stability of the Dow and the S&P and the NASDAQ, the unemployment rate, and kind of more specific to the real estate industry, where's the where's the 10-year treasury at, swap rates, the MBS rates, the Fed funds rate, what's private equity funding at, should I even be using my own money for these investments? So that's kind of in general the more macro features I think of.
Okay, so the asset manager is going to be looking at these three pieces at any given time of KPIs, these three categories. It sounds like, you have your asset KPIs, like, occupancy rate, like we talked about. You have your micro KPIs, like things happening in the region. And then you have your macro, which is more interest rates, world news, pandemic, because those all have impacts on your particular asset in your particular town as well. It all trickles down.
Yes. Yeah. And so the asset manager is just constantly, tracking this information and using it to attend to items that can be improved. Just really consistently tweaking the performance as best as is commercially, reasonable, and analyzing the trend of each asset in the portfolio versus comparative assets in the portfolio and two comparative portfolios in the area. So this information is going to be the guide for the asset manager and really set the marching orders for improving the asset's performance and adding value. And the manager, needs to really just work on how to most logically and strategically, sequence the management of these items in connection with the bigger picture and the owner's finances and so forth.
Right. So in that whole sequencing, it's almost like, okay, so the asset manager determines, where they want things to be with the property, but that they'll need to actually roll this out into real life. So not only just determining things sitting behind a computer, but actually speaking to the property manager, like we said, to say, hey, we need to get the leasing team at this particular occupancy rate, please. And then also, so they talk to the asset manager would talk to the property manager for like certain asset KPIs to reach. And then do they similarly, when it comes to micro or macro KPIs, are they talking to the owner of the property and discussing what they can do in that way as well? So it's kind of coming into communication and realizing who to speak to about what KPIs and how to get them where they need to be.
Right. The owner's the most important part of it all. If you want to maybe even refer to the owner as the, final and most critical KPI, if you would, across all categories.
Sure.
Asset, micro, macro. So at the onset of the owner's engagement of the asset manager needs to know, who is this owner? What does the owner want for this asset? What does the rest of the owner's portfolio look like? Is the owner risk averse? Or, do they have a moderate or high threshold for risk? Is this their bread and butter investment, the income of which is used to support their family? Or, is this a hobby? They could want you taking what's currently a higher risk portfolio and adding more stable, lower yield, recession-proof type assets to better diversify the portfolio. Or they could be looking to, strategically hedge a completely different type of business they have.
That makes sense. So going back to kind of the structure of what we talked about today, we've been talking about the asset management KPIs of that trickle down into asset KPIs, micro KPIs, macro KPIs. So all asset managers have this kind of more standard set of KPIs that they're all going to be looking at. But it sounds like what you're saying is what really cuts an asset manager apart from the rest is going to be identifying and really knowing his or her investor and what that investor is trying to achieve overall with their financial goals, like, taking high risks for high reward, or does this investor prefer stability?
Yes. Yeah. the better you know your owner, the best you can provide, the utmost value to them through your asset management services. You want to be completely plugged into their disposition, if you would, and their vision, because that will plant the seeds in your mind for the tenure of this particular, asset or assets hold period, that will enable you to think critically. Ideas will come for the asset given the nature of the broader portfolio and market and the owner's overarching goal. And you want to be in a position as an asset manager to be able to decision a trigger pull to take advantage of a great opportunity that arises that's in perfect alignment with all of this, because those opportunities come. So really at the beginning, it's, tell me who you are as an owner and what you've got and what you want. And then the asset manager is going to handle this asset and portfolio for you. The asset manager is still, like you said, they're going to manage the asset as they would any, looking at those KPIs and driving performance. They're just going to flavor and tailor that management governance through, every single action they take with this main theme. Is it an annuity? Is it a flipper? Is it a hobby? Like I said, is the owner going to be headquartered out of this building? This could be an owner user type investment, and we've got different, corporate or tax strategies to consider. And of course, real biggie is always with any asset or stock or investment, real estate or otherwise, what's the owner's risk threshold?
Sure. And so you have this management that you're going to be doing no matter what. But right. I like what you're getting at with, when opportunities arise. I think that's sounding like it's sort of a key moment, because in real life, these are all concepts, right? But in real life, like, for example, I think anyone who's looking for a house right now in the residential market, I know we're talking commercially almost always, but in the residential market, anyone who's looking for a house right now, one of the most important things you can do to actually secure the home that you want is to be ready, is to be pre-approved and be ready to strike and be the first one to show up to that house showing with a check in hand. So it almost sounds like, sort of similarly to that an asset manager knows their investor and should know their investor so well that they're keeping an eye on certain assets in the market and certain things in the market. And then when an opportunity arises, one of the big moments is how quickly can you as the asset manager get to that listing prior to anybody else, or seize it and just know, I know this is what my investor wants.
Right. Yeah. I think with value, we commonly think, make it worth more in dollars, and of course, yes, an asset manager is going to do that. However, the truer value that the asset manager is adding to the asset or, group of assets is, whatever the owner tells you makes this thing valuable to him or her, in light of their own goal with their larger portfolio, or in light of their personal mission, with their real estate assets or this specific one. So, we know now, just a straight up, how would an asset manager manage an asset and handle it appropriately if we didn't know any further information from an owner? But knowing your owner, that's going to be what you thread through every single decision you would normally make in managing the asset that makes your typical asset management approach to commercial real estate, customized and specific to your owner's goals.
Sure, because, the same set of KPIs is not going to apply to all property owners. It's really going to depend. Do they want something stable? Do they already have a, portfolio full of risky, properties? or do they have a portfolio full of comfortable properties and they're ready to take a risk? So this is
Right.
really interesting how the KPIs and how an asset manager's role is going to kind of shift and bend and flex depending on the investor and just how important that investor is, the crux of things and what they're looking for. So
Right.
I think it'd be a great time now to sort of talk about these things in real life. I mean, we kind of touched on a couple examples, but I know that I think for today you prepared an example or two, a real project that you've worked on in the recent
Yeah.
past that we can actually look into. So why don't you tell me, Lisa, which one you want to start with, and just give me a moment and I'll pull it up. I'll get it all set up on the screen here if you let me know which one you want to get started with.
Sure. So I have two. Let's start with 324 Datura.
Okay, let me get 324 pulled up here. And now, while I'm doing that, you can just kind of give us some information. This property is also called the Atrium, right? And it's situated
Right.
right
Right.
there in
Downtown West Palm.
downtown. Okay. So I think I've got it all pulled up here now. Let me just share my screen. And here we go. Okay, so and
Yeah.
if I recall correctly, these are some before and after pictures, right? So the before
Right.
pictures are, I don't know if you can kind of see my mouse hovering over here, but the before
Yeah.
pictures are these kind of yellow building sides here on the top, and then where you all netted out at the end is the green, right? The green building at the bottom.
Right. Right.
Okay.
So my investor's goal here was for me to find a local asset or two to raise about $5 million in capital over what he had kind of put a ceiling on time for about 5 years. So I located actually one right asset to do this with. That's this 324 Datura. We bought that at the beginning of 2015. So this is kind of interesting. I'll take you through the KPIs on this. Starting with the asset, where you're typically looking at occupancy rate and NOI and so forth, just on this particular property, I'm not even being funny. They were zero, it was 30 some odd percent occupied.
Oh, wow.
Yeah. Gross rents were around $17-18 a square foot. So, I mean, just well under market. Receivables were an issue, even at that, but this was my market, downtown West Palm Beach. And so I knew cold what the KPIs, would be and could be as far as rents per square foot go and occupancy level and operating expenses per square foot. This building just needed local management, and obviously a facelift and some interior work and someone just really driving leasing. It wasn't so vacant for any real reason other than you simply, I would tell everyone, you just missed the building as you walked right by it. I'm quoted in the paper calling it the vanilla building. I always feel bad about that. But, the former owner had bought it so cheap. They had bought the debt from a previous failed owner. And so because he had got it so cheaply, it wasn't really causing him any problem, being so unattended and vacant. But so we were able to pick it up, at a really good price from him, even, due to the super low KPIs of the asset.
Sure. Okay. And yes, I have to say, it looks like we're looking at a building that doesn't have a whole lot going for it. The building on the top of the images here, the yellow building, it doesn't look like it has a lot going for it. And then when you're looking at these KPIs, initially you're also seeing doesn't really have a lot going for it. Those occupancy rate is way down, price per square foot under market. But the area, and you're keeping in mind that the main KPI, which is your investor's goal,
Mm-hmm.
which is to, make a certain amount of capital in a set time frame, right? That's what we were discussing before.
Right.
And so you knew that this building could do it. So while the
Yeah.
initial KPIs at any given time weren't looking great, you knew the investor's goal was more long term and that this building was going to get him or her there.
Right, right. So, yeah, investor most important part. And yeah, so I had been given that mandate to raise this 5 million in capital in a 5-year time frame. And there were other details to this task. Importantly, one was that I stay under $10 million in his investment funds in order to generate this capital raise. By that I mean between the acquisition cost and the capital expenditures, we knew we'd have to inject here, and the carry cost due to the existing operating expenses and nearly zero rents. So the KPIs of this asset were very ugly, but I knew the potential here, and so as far as the micro KPIs, just the location was superb. One block off the main strip in downtown. Brightline was in the works. That's the train to funnel people from Miami and Fort Lauderdale and Orlando, right onto this asset street, one block west of it. There was a great deal of development and projects in the pipeline from the meetings I was visiting in with the, Community Redevelopment Agency and the Business Development Board and the Downtown Development Authority and whatnot, just all, very positive stuff. And then as far as the macro KPIs, just kind of very simply, all the major markets and news were all, suggesting and revealing that the markets had really come around and stabilized, and things were just looking very good. Interest rates were good. And so, interestingly, with KPIs and tracking the performance during the tenure of an asset's hold period, if you were to spot check this asset during the first few years of ownership, you'd be thinking, well, geez, who's your asset manager, and let's get rid of her, But so we had a plan, and so that's how we circle back, to my owner and most critical KPI of all. He got the asset and the CapEx and the carry costs and everything all under the price ceiling he wanted. And he cleared his 5 million in capital he was looking for on the back end 5 years later, at sale. So it was a great project.
Yes, it sounds like it. And again, I just have to say how interesting KPIs are. And, you really need to define what it is that you and your investor are looking for here. Because, again, as you're saying, if someone were to spot check it during the course of the couple of years that your investor owned it, they might think, oh, like you're saying, who's this investor? Who's your asset manager? But really, no, that's not the goal. The goal was not to have the building make a lot of money in the first year or the second year, for it to be a comfortable building that brings in a good income year after year. Instead, it sounds like what you all had determined was the goal for this building, or just the goal of the investor in general, was I want $5 million more in a certain time period. Find a way to make that happen for me, and I'm only going to spend $10 million doing it. And so what you did is you identified, here's a building that's going to be able to, cost under 10 million for us, and it's going to be able to get us more than 5 million, or at 5 million capital raised at a certain time period. And so it sounds like you're saying it happened. You all made that happen.
Right.
Very cool.
Right.
That's really, I think that's really interesting, again, just so you could look at something that, from a different set of KPIs, a different set of perspective, you might think, this building's really not doing well. But actually, just wait 2 years later, we have a bigger goal in mind, and we accomplished it with flying colors.
Right.
Really cool. I like that a lot. So it looks like we do have time to go over another example. I know you had another one for us today, Lisa. let me stop my screen share of this building and move on to the other. I believe the next one is Gator Industrial Park, is it?
Yeah. Yep. We call it Gator Drive for short.
Gator Drive. Okay.
Yep. Yeah.
So let me get that screen pulled up here. Okay, it should appear any minute. There we go. Can you see that okay?
Yeah.
Okay, great.
Yeah, sure can. So again, I guess let's start with, knowing your owner before we dive into the KPIs and whatnot. So the goal of my investor on this one was to diversify the asset base in their greater real estate portfolio to include more recession-proof, annuity type assets. So now we're looking for something that's the complete reverse of what we were talking about in the previous example. We're not looking for a cash windfall at the end, though my investor likes that, but rather, we're looking for a slow and steady wins the race type asset, a nice, calm, stable, income producing, even, low yield, but just a safe investment to better, kind of more,
sure.
I guess, just better diversify the portfolio. So I located Gator Drive Industrial. And so now, so, moving forward into the three sets of KPIs, asset, micro, macro, and of course, overarching, king of all KPIs, the owner, I knew I had that box checked now. And I knew how I'd continuously, check it through the entire life of the asset management due to the KPIs of the asset. So the initial, going in asset KPIs were all very stable and fair. The occupancy was floating right around, just under 100%, and the same with the, historical lock rates. The asset was throwing off a stable, 7 3/4 cap. I knew I could borrow sub 4. My arbitrage looked good. But yeah, so just all looked stable. The leases would, I'm sure, have turnover here, and the rates were fair. The demand was consistent. The operating expenses were fair. The investment in total, just, I don't know, just the word that keeps coming to me is fair. And it was listed by a trusted real estate broker I knew real well, and the property was industrial, so think low maintenance from a management standpoint, and it was trading at less than $90 a foot. So you can't build for that, and we've got tenants here already, and 100%. So from an asset management.
Sorry, and I love the word that you say, fair, because it's like that's what the king of all KPIs, the owner, said. He wanted something that was safe and fair, and you just kept saying stable, throughout the process of describing this: fair, safe, fair. Even down to a real estate agent or broker that you said had it listed, just even that you felt comfortable and knew that person well in the market.
Yep. And so then managing, this asset, I'm really doing, all the things I would normally do, just overseeing the property manager and maintaining and tightening, where possible, the operating expenses and anything that was, starting to potentially look, out of line with AR. I mean, it just really was a very, just a very solid property. There was some deferred maintenance to attend to, and even a little CapEx. I mean, you can see the buildings were pink and teal, pink and teal. So that was more just that was a me issue. Like I had to fix that.
Right. But, and so I don't think we actually mentioned these pictures that we're showing here. They're the before and after. We have pink on the left, and then we have a more comfortable modern gray on the right. Right.
And that, all the tenants were happy with it pink. It just, I just wasn't going to be able to handle that very long. So then I guess, moving into the KPIs of the micro markets, that's where you're looking at the vicinity KPIs. So for Gator, I'm meeting with, the surrounding areas professionals who I know real well and feeling really good about what the local lenders are saying and what appraisers are saying cap rates are, the demand I'm seeing for industrial space and just general, area activity. And literally across the side street from this asset was a long leveled and since dormant the old A.G. Hollis hospital site, which was rumored to become it was either going to become a 280,000 square foot shopping center with a 150,000 square foot residential condo component behind it, and there was talk of a 200,000 square foot office building, still in an approval process, but definitely with something exciting to come, and a non-competing, whatever it was going to be, thing to come on this adjacent, 70 to 75 acre parcel. So I'm feeling really good about the micro KPIs, going in for the life of the asset. Traffic counts were great. The area was, just active with prospective tenants. I knew I'd just add a leasing sign in the ground and the phone would ring there, and so forth. And then, just moving into macro, just really the markets at this time, continuing to rebound. There had been, for a handful of years, major news and rates and markets appeared to be stabilizing and just moving in a really positive direction. So everything we saw in the macro markets really kind of looked good there too in terms of KPIs. So just a good one.
Sure. Yes. And, did you, so outlining you have your asset KPIs, your micro, your macro, and just looking at where everything looked really good. And can you remind me what those investor specific, what his KPI was? It was just to maintain a stable asset, right?
Right. He had a more, just a higher risk portfolio, more, buy something like in the previous example that there's a lot of risk going in, but there was a great opportunity on the back end. But, if you have a portfolio of assets like that and, let's say you have a recession come through or, just these events that do occur, where's the stability elsewhere in the portfolio that's going to help push you through, so that's kind of more what his buying mindset was, a handful of years out of the recession, was let's just kind of get this portfolio a little more 50-50.
Right.
So, and this was a really good, a good one to start with, so I hate to call it non-exciting, it just, it fit exactly what he was, looking for, but he was more of a value add guy. So, it was, even though it was what he wanted, it was still a tough sell for him,
Sure. And just even interesting that the KPIs, change for certain investors, like what they're looking for changes over time too. So not only do you have one personality that or one type of portfolio that is going to be this way with this particular investor, actually not so. In come a recession, and then coming out of that recession, that investor might change his mind and want to stay, a little more stability in the future. So you kind of have to adapt to that as well.
Right. Yeah. And like I was saying before when we were describing just initially the fundamentals of asset management, where knowing what your owner wants and knowing how to, analyze the KPIs and manage and lead on that front, as you're moving through the, just your general asset management process, opportunities come, or can be discovered. And so in this particular case, there was some real silver lining here, because an opportunity did come up. With this one, it was the square footage. So the units here hadn't been remeasured since decades prior. The building was built in the late 80s, and I don't know that it had been remeasured since then. And what had happened since, I'm not sure at what time period between the 80s and now, but the tenants over time had built some mezzanine levels, inside of these units. So it's an industrial, flex type property. So the ceilings in the warehouses were anywhere from 16 to 24 feet or so in height.
Okay.
And each unit, I would say 85% of it is warehouse, and then 15% of it was front office, or some of the tenants used it for like front showrooms and whatnot for clients. So above the drop acoustical ceilings in these front office portions, many tenants had converted, let's say they constructed upper floors, like, right overhead between
like lofts.
Like lofts, right? Between that and the actual super high ceiling. So this was used in numerous cases as, additional storage, and some had even converted the space to upper office suites for their administrative staff. And and some of the mezz, even wraps around on portions of the interior sides of the warehouse units for additional storage. But, when all was said and done, this was at least an additional 15% of usable square footage that had not been counted across the property. So
okay,
instead of a 40,000 square foot, 3-acre, 2-building industrial park, I could see it as a 50,000 square foot park, and we had the parking to meet code. So so I hired a professional square footage analyst to remap out and capture each usable square foot. And so I'm, doing everything I do with the day-to-day asset management, and the property manager is doing everything they do with the day-to-day property management. But like I was saying about kind of tailoring your process to, add value, or to, whatever your owner's, truest intention is for you. This, square foot, this is what we're threading through our management, as we're renewing leases and filling vacancies and so forth. We're getting in each lease the corrected square footage memorialized, which, you could do in one fell swoop, or be more patient with the process, which is what I had guided. And it was kind of like a two-phased process. It took some time. I won't bore you with all the details, but
I was just gonna say, you find this silver lining where there's a lot more square footage, and then how do you, if you determine your building has more square footage, how do you work your way into rolling that out to people who already occupy that space?
Yeah, so I stop me if I get too detailed, but
okay, but yeah, it sounds interesting. So let's hear it.
Okay, so
and let's be clear, just in case anyone's just tuning in, let's just be clear what we're talking about. So right now we're talking about, we have this Gator Drive building, warehouse space. We've purchased it for our investor because we believe that, or we're feeling good about the KPIs of this being the stable investment that he's looking for. Not looking for anything crazy, any big, high risk, high reward type of thing. Just looking for something more stable to help diversify that portfolio that's already a little risky. Let's kind of calm things down and get a nice stable asset. So we own the building, we purchased it, we own it, and then somewhere along the way we find out that inside of these warehouse spaces The tenants have been building because the ceilings are so high. They've been kind of over the course of since the 80s or whenever it was last, these spaces were last measured. The tenants have been creating extra storage space, making use of those high ceilings and creating lofts, if you will, for more office space above the warehouse or even just more storage. And so you come in as the owner's representative of this building and you're starting to see, wait a second, we actually have more square footage in this building now because of these loft spaces. So this is kind of like this little banner that we have at the bottom of the screen, you know, always keeping an eye for value adds. This was not something that the investor was like looking for, but my goodness, what a silver lining. What a prize, what a treat that this building is actually having more square footage than we thought. And so now that begs the question, and this is what you're about to answer for us, Lisa, is how do you make that happen? You have tenants already occupying a space at a certain rent per square foot and a certain square footage. So how are you going to say, just walk into the door to those tenants and say, actually, your 1,000 square foot space is more like 1,500 square feet, so we're going to need to up your rent today? Or how does it work?
Right. And you can do that. And I'm sure landlords, you know, and property managers and asset managers do that. But I would not do that. So I've really split it into two phases. You know, phase one was just start incorporating the corrections at the time that the leases came up for renewal. And with new leases, you know, somebody was not renewing and the space was going to be vacant, and I was having a new, you know, prospect take a look at the space, want the space, sign a lease. You know, it's very easy. You know, here's the, you know, square footage. Here's the, you know, this is what the rent is and whatnot. But I didn't want to bother the, I just didn't want to take the current tenant base and throw the surprise at them as soon as they just got under new management. You know, it'd just be probably the wrong way to start off a new relationship.
Sure.
So I, as their leases were coming up for renewal, you know, kind of every, you know, few months someone would come up. I kept their rents roughly the same, you know, meaning that the actual rent per square foot, the rate, you know, of very important KPI stat, went down considerably because the rental bottom line dollar amount is being factored, you know, per square foot now on a larger square footage. So if I were to have adjusted the rent per square foot to actual market rates at the same time I was correcting the additional square footage, I think we took a risk of losing tenants, you know, so that's why I felt this was best split into two phases. So, and again, you know, here's another opportunity where somebody would have gotten rid of me if they were spot checking my KPIs and saw this rent per square foot number.
Right.
So,
But
yeah.
Sure, that makes sense. Again, these KPIs are so interesting, and the timing of them and just knowing what the overall goal is, because, you know, this wasn't even something that the current investor was noticing was happening or knew that he even had extra square footage. So,
Right.
you know, while someone might have spot checked the building and been like, oh my goodness, these PSFs are so low. Well, no, you know, this asset manager found this silver lining, found this treat in this building. And so you're slowly going to work your way up to
Right.
getting the proper PSF, but at least you're collecting a little bit more on a little bit more square footage than you were initially. So all in all, for the, you know, current investor, it's a win, right away.
Yep. Absolutely. Yeah. So, you know, phase one, you know, provide the tenants the corrected, you know, floor plans from the professionally, you know, licensed square footage analyst, and get that memorialized in the lease. And then phase two was working in the appropriate increases in the future in a way that the tenant would agree was also more palatable for them. So, you know, here we are a handful of years later, and that property that we got, it was listed at 3.6, but we actually closed on it around 3.25, December of 16 or January of 17. It's been consistently stable as planned, and it's going to continue to be, given all the indicators that we know. But we found this value add. We also just recently had it refinanced, and it was reappraised in the process, and so the rents are still slightly below market due to this longer, more intentionally gentle process on the tenant base. It's just valued out now at 6.35. So we've done a great job here.
Wow, that is quite a story.
Yeah, square footage is important.
Yes, my goodness. And so I have a few questions that I want to kind of close out with today. It looks like we're about 10 minutes, from being up to about an hour, so we can kind of end soon. But I do want to ask a couple questions, and one of them actually ties in really nicely to what we're talking about with this Gator Drive, Gator Industrial Park, these value adds. What are some other things you can tell us? What are some other ways to add value to an investment other than maybe tweaking the KPIs or a surprise like this one?
Sure. So some value opportunities that I've actually experienced in the past was I had an owner who had an office building on a huge parcel with way more parking than necessary per code. So we carved out an out parcel opportunity and land leased it to a credit at Polo Tropical. So that was a great value add. Generated a ton more in income and traffic and whatnot. You can convert basements in office buildings to storage use for additional income and convenience for tenants. If you have parking on site, sometimes there's covered parking, non-covered parking. You can create additional income on those fronts, converting larger floor plates to smaller executive suites where you can charge more per square foot for the services you're offering. And actually on a value add, from a value add lens, the exact reverse works too. If you were to completely open up a floor plate and lease it to a large credit tenant, that really adds to the value of a property as well. Or just, when you're managing an asset, other ideas come to mind. You could decision, hiring maintenance technicians on payroll to float between, solely your buildings versus outsourcing, all that to a PM company, and same with leasing agents, opening your own PM company with leasing agents and maintenance technicians. I've sold air rights. Other ideas would be we kind of scale through buildings in the property condition reports when we're first purchasing. And, sometimes you make decisions to upgrade, mechanical systems to ones that are now more energy efficient. Or, we're looking at buying another building in downtown recently where the CRA would provide a huge grant if we upgraded it to a clean building, which now the standards are being developed for to, if you have a hand sanitizing station, every so many feet, and so just interesting ideas for either, financial assistance or value add, or being able to better promote, your building because it's of a certain caliber now. And then just, larger decisions with the portfolio, letting go of assets and redeploying funds for better opportunities. I can go on and on and on.
I know, my goodness. I mean, these ideas are so creative. I love it. And I think it's, also really helpful. I hope that we have some asset managers watching or going to watch the recorded version of this later. Excuse me, not asset managers, property owners and investors. I hope that they're going to be watching this at some point or are watching this, because I like that it's giving some ideas for them that they might not you know, have noticed or recognized
Mhm.
prior. Maybe they can talk to their asset managers about, hey, do we have air rights that we can sell, or
Yeah.
different things like that. Now, let's stay on the conversation of questions and answers that are helpful for property owners or investors that might be tuning in. I think that's would be quite helpful for the purpose of this video. So another question that I think would be really great for a investor to have an answer to is, um, when you're looking for an asset manager, um, to hire one to manage your property, um, or your portfolio, are you looking for an asset manager that has a certain type of license, or just the experience like you have, where you have all of these situations under your belt of things that you've done to help create value? Or are there indeed licenses that are required for this, or you really want certain licenses when you're looking for an asset manager?
No, so you do not need a license to be an asset manager. This is, in my opinion, why the experience component is so critical. Interestingly, and as we discussed in the last month's live stream, we were talking about property management. You do need a license to be a property manager. You have to have the brokerage license. With property management and asset management, you can definitely accrue a series of designations like your CPM or your RPA or your CCIM. I think those are important and definitely add to just your whole presentation package, but they are not necessary. And also because there's no state licensing with it, like a broker, a property manager, an asset manager is not limited, by state lines. In my opinion, that the person needs to be highly experienced, just deeply
Sure.
seasoned and having in-depth, market knowledge of where those assets are. Great, management skills if they're managing all the PMs. And depending on the size of the portfolio, I mean, it depends how many, property managers you're actually working with, and obviously interpersonal, communication skills. I would also say that this person should be a terrific analyst. And perhaps the most key trait of an asset manager is you've really got to make sure that they're entrepreneurial, bringing the owner ideas, but proactively and with the resolve
Sure.
to make things happen. This is where a great deal of value is generated for the owner.
Sure, like taking initiative and
Mm-hmm.
being innovative in ideas. And this is a perfect moment. We actually just got a really lovely comment from Lisa Stella. Thank you for tuning in with us today, Lisa Stella. She says, truly a
Thank you,
visionary.
Lisa.
You have so many wonderful, creative, cost-cutting, and innovative ideas. Oh, that's wonderful. Certainly, when Lisa was walking us through, Lisa Gerard was walking us through some of these, I can understand how Lisa Stella would feel that way. I felt the same way, that they were really cool and unique ways to think of doing that thing of adding value, that big thing that we're talking about, adding value to the
Yeah.
property. And I know, as we talked about, the king of all KPIs is the investor, and the investor might have a particular set of goals. And so definitely having those being the priority. And then who knows, somewhere along the way, just keeping that eye open for value adds is definitely not going to hurt. It's definitely only going to be a benefit for the investor. So that's wonderful. And so thank you again, Lisa Stella. I'm going to just pop that
Yeah.
back off the screen so that I can pull something up here in a minute. I actually wanted to, on the conversation of things that might be helpful for an investor to know about asset management. So again, I think this video would be really helpful for an investor. And let's try to give them as many tools as they can have about asset management. And I thought a great thing that we could do, Lisa, is pull up the infographic that we created this month related to asset management. So let me just share my screen and get the right window pulled up here. Okay, there it is. Can you see that?
Yeah.
Okay, great. So I just thought that this would be a great thing to talk about sort of in closing today. And we might go a minute or two over, but again, we've talked about throughout the duration of this conversation, these main KPIs that an asset manager is going to be looking for on the behalf of an investor. They're going to be looking at asset KPIs, determining asset KPIs. They're going to be looking at micro, what's going on around the property. They're going to be looking at macro KPIs, what's going on in the country, in the world, in the economy. And all of these things trickle back down and do affect an asset in whatever town. It always ends up being that way, right? And then we talked about the king of all KPIs being that investor and what they're looking for. So now let's get back into it with that investor, and let's help that investor understand certain things that might determine what that investor's KPIs are. The asset KPIs, the micro, the macro KPIs, those are things that are usually defined that you normally look for across the board, a certain set of asset KPIs like occupancy rate, certain set of, micro KPIs like, what's going on in the neighborhood. But those investor KPIs, how do they determine what's important to them, right? And I think that this infographic does a decent job of helping that investor arrive at some answers to some questions that they might get asked when speaking with an asset manager, right?
Right.
Okay, so can you kind of take us through?
Yeah, as I'm hearing you say that, it's very interesting. So, how we're talking about, like you said, the KPIs of the asset, micro and macro. This chart is really like the internal investor KPI, kind of internal investor, DNA for what sets their KPI for what they want their portfolio to look like.
DNA. As a designer, I am now rethinking this whole infographic. It should have been like a helix, a DNA design.
Well, now these are the questions, these are the subject areas really we're using to get an idea of what the investor portfolio should look like based on, just based on the answers to these questions. They help so much to indicate the real estate investing sentiment of each owner, which is just, so important. Real estate is, in most cases, the largest investment, financial and otherwise, in most people's lives, residential or commercial. It's in all likelihood the largest line item on most balance sheets, and of course accounts for numerous line items on the expense side of their operating statement. So there's just too much to it, too many minor and major aspects where, when you're talking real numbers, which we always are in real estate, to not go through the work to really ferret out, what your owner's disposition is, what their desire is for their portfolio, and then how best to carry that out with, what as an asset manager with, typical asset management.
Sure. And, if you think we've kind of gone through this enough, I think we do have one more question that would be helpful to kind of close on. And was there anything else you wanted to describe about this infographic or the pieces of it, or?
No, go ahead.
Okay, great. So I think the best thing to kind of close out on is if there's anything else that we missed about. I know we talked about certain pieces of this throughout the conversation, but kind of in conclusion, let's like recap what, you know, you think the most critical part of asset management is, and or, you know, what would you say are the most important skills that an asset manager should have, that an investor would want to look for?
Well, I would say kind of when we were talking about the licensing and what I would look for in an asset
Right.
manager, you know, most important always the owner, knowing your owner. But you know, I think I may have said this, but just, you know, being a terrific analyst, but that entrepreneurial spirit, I mean, that really, I think, is the overarching characteristic you're looking for with an asset manager. So I'm not sure if that answers your questions. You know, is it the most important thing as your owner? The most important skill, probably the entrepreneurial nature.
Okay. Right.
Management ability.
Right. And I know we talked about, you know, different things throughout this conversation, like, you know, being an analyst and whatnot, but I do think it's kind of nice to come back in a conclusive way of, okay, if we had to drill it down after I've told you all the different things that are helpful, you know, just interesting to hear your opinion, Lisa, that, you know, the owner is the most important thing, and that as for the most important skill, it's that entrepreneurial sense, because that can help with those value adds and whatnot. Well,
absolutely.
Gosh, this definitely was a good one. I love talking about asset management. I think it's a really interesting topic, and you know, it parallels to a lot of things in other aspects of the world. You know, it parallels to, you know, residential. It parallels to just like investing, you know, not just real estate investing, but investing overall. So I think it's a really, you know, anyone could benefit from this video, and just kind of applying the overall concepts to whatever they're working on. So thank you for your time and introducing us and getting us through asset management as it applies to commercial real estate. And I think, you know, we are ready to close out for today. I think maybe just one last thing we could say is stay tuned for next month's live stream. We're going to be talking about due diligence management. So that's also a really interesting topic that I think, you know, you've even expressed a lot of excitement about, Lisa. I think you're really loving due diligence management, right?
Due diligence management may be, is my favorite, the greatest thing I do. I love managing due diligence.
Okay. Well, hold, my goodness. Then before we end, we're going to have to can you just give us like a sentence of what due diligence management is? Let's tease everybody for next month.
I can tell you that you're going to hear a lot of the same factors that we talked about today. Really, you know, it's if you're in due diligence management, it's, you know, really proactively addressing what asset management is going to look like when we get in there, you know, as an asset manager ahead of a pre-existing portfolio. A lot of times as an asset manager, you're pulled into an existing portfolio. And so when you know, have the ability to get in ahead of time and really just set a plan in place, you know, that's a lot of fun. I love analyzing an asset. I love a lot of ideas come up during that process, little value add ideas and whatnot. So it is my favorite, you know.
Oh, that's really cool. I'm excited.
Yeah.
I'm glad that we kind of did it in this order then, because it can kind of branch out now with the foundation.
Yeah, sure.
We should tell everyone that that's a prerequisite to watch asset management before set up a course here. Well, wonderful. Thank you so much. And just a reminder to everyone who tuned in, now that you've watched the duration of this video, you are going to be prepared to answer the question on social media and receive some REMCO giveaway gear in the mail. So as long as you're the first person to answer correctly, you will receive the REMCO gear in the mail. Lisa, thank you again for your time this month. I had a wonderful time with you. Thank you for sharing your knowledge and your just decades of expertise in the industry. And I look forward to next month.
Thank you. I do love it. I love what I do.
Wonderful. All right. Bye, everyone. Have a great day.
Bye. Bye.